Good afternoon. Welcome to BizTech Asia's Asian Midday Market Watch on the 14th of March 2024. I'm Jeffrey Halley and my co-host today is Samantha Voon. And our guest today is the inimitable David Kuo, founder of the Smart Investor in Singapore. David, as ever, wonderful to see you on the show.
I know. By the way, did you know that the 14th, 1-4, is not a very good number for Chinese people?
I thought the 4 wouldn't be working out too well. I didn't know the 1 in combination was bad news as well.
Well, when you put the 1 in front, it means definitely die, yeah?
Oh, okay. I'll keep that one in mind. Oh, I've just realised I was born on the 14th.
and you survived, yeah. So
it might be the strong one, Jeff.
Okay, let's have a quick look around Asian markets today and see what's been happening across the region. The Nikkei 225 is up just 0.32%. Shanghai is basically unchanged. The Hang Seng has retreated by 0.66%, with the ASX 200 in Sydney down just 0.26%. In South Korea, the Kospi has rallied by 7.2%, with Singapore's STI also rising by 0.62%. It's a quiet day in Kuala Lumpur with the KLCI up just 0.06%. David, I know you love talking about short-term moves in the market, so I have to ask you this. It's a bit of a mixed day today in markets once again.
Yeah, why don't you just wind me up some more, yeah? I mean, short-term movements in markets really excite me. Seriously, I think there's a bit of profit taking going on in the markets right now, and what we had in America last night was kind of a mixed picture. There was some profit taking going on there, and I think it just kind of followed through over here in Asia. Ultimately, markets have had a pretty good run, but it's quite interesting to see the KLCI still in the green at the moment. My favorite market. Thankfully, I managed to buy some shares yesterday. I'm pretty sanguine about what is going on in the markets right now, and we'll be talking about interest rates a bit later on. But ultimately, I think the markets are doing what they're supposed to be doing right now, which is sitting on their hands and waiting to see where the direction of interest rates are going to be.
Mm-hmm. Since we're on that topic, David, on interest rates, why are the investors ignoring the prospects of higher for longer interest rates? What a
good question. What a good question. What a good question. I wish I had the answer, Samantha, but I think I can attempt at an answer to that. What they're hoping for is that if you have a look in America, despite the fact that interest rates are relatively high, the economy is still growing and jobs are still being added over in America, which then begs the question, what does the Fed do next? And do we think that interest rates have peaked at the moment, or do you think they'll come down? I think this is where we get a division of opinions. Some people say that, yeah, it looks as though inflation is going to be pretty subdued at the moment, so let's start about cutting interest rates. The other side of the equation is, why do we need to cut interest rates? If you have an economy that is growing, an economy that is adding jobs, why would you want to cut interest rates? What are you hoping to achieve by cutting interest rates? And some people are saying, and this is Jamie Dimon, saying you don't need to cut interest rates until you see some kind of recession on the horizon. And there is no recession on the horizon. Companies are still doing relatively okay. Their earnings are still growing. Yeah, the PE ratio is around 24, 25 for the S&P 500. Admittedly, a lot of that is being driven by the Magnificent Seven or the Super Six or the Incredible One, NVIDIA. But I think, what you actually have is that the American economy is doing okay. And so people are saying, let's go in and buy some shares. And in my case, let's go in and buy some of those dividends that these companies are paying out. So I think that is my answer, Samantha. I wish I had something more definitive, but ultimately, if we think that interest rates are going to go higher from here, which I don't think is going to happen, then the only other direction for interest rates is to either come down or stay where they are at the moment.
If I can just jump in there ahead of Samantha, when we look at the Nikkei 225, it's had a fairly sharp reversal from those heady heights near 41,000, I think, in the early part of last week. And it seems to be the opposite question there. Is the Bank of Japan going to hike rates there or unwind the zero interest rate policy? What are your thoughts on the Nikkei and the nerves that are floating around in Japanese equities at the moment?
Well, that is an interesting one. Where is the Bank of Japan going to go right now? We can see evidence that the economy in Japan is not really growing as quickly as they need to. So on that argument, you would say that the negative interest rate policy will remain in place. Then on the other hand, does Japan or the Bank of Japan want to see the Japanese yen lose its value against the US dollar? It probably doesn't want to do that either. So as far as investors are concerned, what they want to see is some kind of clarity over at the Bank of Japan. And so why would you want to put your money in the market now? And you make a really good point. The Japanese market has risen quite significantly. So if you did have money in the Japanese stock market, wouldn't you take your money out now and then just wait for some kind of clarity? In my case, I do own some Japanese assets, and I'm quite happy to keep them there at the moment because guess what? They still continue to pay me a dividend, Jeff. And so I just wait for those dividend checks to come in twice a year.
And we should say to our viewers, David is an income investor.
Unashamedly an income investor. And there's some dividends check dropping into my account later on today, Jeff. I look forward to that.
There you go. No wonder you've got a big smile. Samantha.
Wonderful. Excited for you, David. So just yesterday, the House of Representatives approved a measure that could lead to a ban on TikTok in the United States. So unless it separates quickly from its parent company, ByteDance. So what can we learn from the proposed TikTok ban in the US?
Well, it still needs to pass through the upper house at the moment, and there's no guarantee that it could. I think what America wants to do with regards to TikTok is for TikTok to be separated from ByteDance. ByteDance is almost there is Chinese investments in ByteDance. And so what they want to do is they don't want to shut TikTok down. What they're saying is, look, if TikTok wants to continue to operate in the US, then it can't be part of ByteDance. That's all they're saying. I mean, I saw some reports come out today from spokespeople over in China, and they're saying, this is going to be the death of free speech in America. And I just thought, there's a kind of irony there, isn't it? Yeah. I mean, first of all, can you get hold of Twitter in China? Nope. Can you get hold of Facebook in China? Nope. So what? It's almost a case of the pot calling the kettle black. Why are they so upset? What they are upset about is that they're saying that in this particular case, TikTok could be sharing some of its data with ByteDance, which therefore means that China will have access to this. And some people are saying, well, is that such a big deal? If you were an avid TikTok user, you could go on to a VPN, just as some people in China go on a VPN in order to access some of those apps that are not permitted in China. So I think we're going to have to see how this plays out. But it's going to be a really tough one. I think this goes back to something that I said about 3 or 4 years ago, Samantha, which is that we're entering this period where there's going to be a lot of protectionism, there's going to be a lot of patriotism, and a lot of nationalism. And this is playing out in a big way across the global stage, and that really scares me.
Yeah, I think it's definitely one of the challenges that's rearing its ugly head in 2024, even more so than 2023. And US-China relations will continue to be fraught. But as you said, it's not just the United States and China. David, let's turn. It wouldn't be a program with you as the guest if we didn't turn to your favorite country in the whole world, Malaysia. The Johor Bahru Singapore Rapid Transit System will be up and running apparently by 2026. It's a pretty exciting and a pretty significant step in the development of that economic corridor between Singapore and Johor. It should foster stronger ties between the two countries. But what are some of the opportunities and threats that you see for investors around this closer economic tie-up via this transit system across between Singapore and Johor?
Well, just to provide some kind of context, it's going to take 5 minutes to get from Singapore to Johor on the rapid transit system. Imagine that, 5 minutes. I mean, it takes me longer than that to get down to my local CS Fresh over here, right? And you can actually get into Johor. There are dangers there, and I think there are going to be some unintended consequences, and maybe there are lots of retailers over here in Singapore that could be sleepwalking into a minefield. The difference in the cost of living between Singapore and Malaysia is huge. There already is evidence of people here in Singapore going over to Malaysia in order to try and arbitrage that difference in the cost of living between the two. So you can eat a lot cheaper in Malaysia, but it still takes a long time to get there. But when it only takes 5 minutes to actually get to Johor, are you going to be doing your main shop over here in Singapore? Or are you going to be doing it over in Malaysia? And that, I think, is the danger. If we have a look at what's happening in Hong Kong at the moment, it is going to be like Hong Kong and Shenzhen playing out between Singapore and Johor. And what is going to happen to things like the retail sector in Singapore? What is going to happen to property prices here in Singapore? It could have an effect. And if you're not prepared for it, then I think there's going to be some big dangers. I mean, I was just seeing recently in Hong Kong, there is the third largest supermarket, which is Chinese run in Hong Kong, and it's called U Select. And it's closed half its branches in Hong Kong because of falling sales, and many of these supermarkets are now unprofitable. The reason is because they're not getting the sales. And the people in Hong Kong are quite prepared to hop on the train, go over to Shenzhen, and guess what? They have Costco over there. They have Walmart over there, Sam's Club over in Shenzhen. So why would you want to do your shopping in Hong Kong anymore? And I think the same thing could happen between Singapore and Johor. Imagine if Costco opens up in Johor. Imagine if something like Sam's Club, which is part of Walmart, opening in Johor. Why would you want to pay 4 times the price in Singapore for something when it's available in Johor? And I think that is going to be it's going to be a game changer for the retail sector here. And I think people need to be aware. And I think there are going to be opportunities in Johor, but I think there will also be some opportunities in Singapore. But that price differential, that 4 times price differential between here and Malaysia, is going to affect businesses in a very big way. And if you're not careful, it could affect you very badly.
What are some of the opportunities, just briefly, you believe this will open up?
I think some of the Singapore retailers may start to think about opening over in Johor. And they could mothball their operations here in Singapore and say the rent is too high, the cost of living is too high, wages are too high. So why would I want to open here in Singapore when I can do so over in Malaysia? And I think some of the more savvy retailers, and I'm talking about the big retailers over here, will say, why do I need, I'm naming one retailer, why do we need 20 Zaras here in Singapore in such close proximity to each other when I can open one in Malaysia and then capture those travelers who are going to be going over there? So I think there's going to be opportunities, and we're going to have to see how this plays out. But I, for one, am going to think 5 minutes to Johor. I mean, that is like a golden ticket to go and buy stuff on the cheap. And I'll tell you something else. Over in Hong Kong, some of the operators, the bus operators, are ferrying people from Hong Kong to Shenzhen and giving them one-day passes into some of those discount stores. So they don't even have to join as a member. They just hop on the bus, go there, do the shopping, and then come back to Hong Kong again. And I think the same thing could happen here in Singapore.
Excellent. That's an amazing insight, David. Thanks so much for coming on the show today.
You're welcome. And I'm waiting for the rapid transit system to open so I can go over to Johor for lunch, maybe.
We know food is always very dear to your heart. We've been speaking to David Kuo, founder of The Smart Investor in Singapore today on BizTech's Asian Midday Market Watch. I'm Jeffrey Halley.
And I'm Samantha Voon.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. You can also see it on our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in today.